Think about it for a moment. A cryptocurrency that anyone can hold for free so directly from their smartphone and without draining the battery or consuming data. Here, this is the incredible promise of Pi Network, a project that has an ambitious goal to make crypto finally accessible to everyone. But obviously such a promise raises a question, but a big question: are we facing a real revolution in the world of digital currencies, or is it a very high-risk adventure? This is precisely the central question we are going to explore. And be careful, because we are not talking about pure theory. On the contrary, the roadmap of the project is, well, it is very clear. The goal is to launch the so-called open network and see stacks in place on major exchanges by 2026. This is the step that would turn Mind PIE into a truly tradable asset. And that brings us right to the heart of the problem. I would say a gigantic challenge for the future value of PIE. A challenge that we can summarize as the demand for 100 billion coins. Here it is, the big number. The maximum total supply of Pi is set at 100 billion. It's a crazy figure that creates a really, really particular economic scenario for this cryptocurrency. Okay, but how is all this mountain of coins divided up? Then 65% goes to the community, that is, to those who do so-called mining on the app. Then there's 20% for the development team, and the rest, 15%, goes into reserve and liquidity. In short, the gist is clear. The vast majority of tokens will sooner or later end up in the hands of users. And this, you see, creates a big economic problem. The analogy that comes to mind is this: it's kind of like trying to sell water during a flood. If something is so abundant and distributed, it is free. The sales pressure, well, will be enormous. Everyone wants to cash in as soon as possible, right? And look, that's not a hoax, is it? The historical data speaks for itself. On average, the tokens that are given away with airdrops stay strong, 88% of their value in the first 3 months. A data that makes us understand the true size of the risk. Well, having seen the economic challenge, let's take a step back and try to understand how this system works. How are these IPs obtained? What does it really mean to mine from the phone? Here, this is the fundamental point. Mining P is not like mining Bitcoin. Forget very powerful computers and dizzying electricity bills. Here you don't need computing power. It doesn't drain the battery. It's more of a mechanism to distribute coins that rewards those who enter the app every day. Practically a timer to be reactivated once a day. That's all. However, the project was not born yesterday. It started back in March 2019 and has since passed several testing phases. The key moments you expect? Well, the LAN. Open network planned for 2025. That's when the network opens up to the world, and then who knows, a first listing on a major exchange like Kraken in 2026. So for those who have accumulated PAI, what would be the path to turn them one day into real money? It's pretty linear. You start with mining on the app, then you have to do identity verification, the famous KYC. After that, the coins are migrated to the wallet of the main network and deposited on an exchange, and eventually convert into other crypto or into euros. The heart of the whole system is meant to, well, go viral. The rate at which you mine IP increases if you log in every day, sure, but also by creating a safe circle with other contacts. But the real turbo is inviting other people. The more people you let in, the more you earn. Simple, isn't it? And we come to the million-dollar question, or maybe a few cents. How much? How much could a single P be worth? Let's address the issue by looking at the speculations that are going around. Here, the estimates, well, are a bit of a roller coaster. In the rosiest scenario, the optimistic one, we are talking about a price between 50 cents and $2.01. A more down-to-earth scenario, let's say realistic, sees it between 1 and 10 cents. And then there is the pessimistic scenario, where the value would remain very, very much below the cent. But be careful, it is very important to underline this. These are only hypotheses, pure speculation. They are based on the idea that all 100 billion coins, already around the real value, who can say, will depend on a lot of factors and is today totally uncertain. Okay, we have come to the point with all these elements. Let's try to sum up. Does it make sense to participate in Pi Network? Let's look at the pros and cons. So, on the one hand, there are no direct costs. You don't take out a one and start a child's play. On the other, however you invest time, there are privacy issues for identity verification, and there is the risk to make those you invite look bad. And above all, its value is a 100% bet. The invitation system is a double-edged sword. Of course, it makes more money, but it also creates a kind of social responsibility. If the project ends badly, you risk dragging friends and relatives into something that wasn't worth anything. In the end, the real question remains there, suspended. Pine Network is the beginning of a new era for digital currencies within everyone's reach. Ure is just a giant social experiment, a test of how group psychology works and the value we place on things. Only time will probably give us the answer.